US government is borrowing money at an extraordinary pace. According to the latest figure released by US Treasury, the federal deficit has already crossed $1.4 trillion in the first 9 months of the 2026 fiscal year. And if this trend continues, total borrowing could move beyond $2 trillion before the year ends. And at the very same time, America is dealing with rising defense spending and continuing geopolitical tension. That means the government needs to issue more debt, and investors are demanding higher rate to lend that money. As a result, US Treasury yield has climbed sharply, with 10 years Treasury yield moving above 4.69% and the 30-year yield crossing 5%. Now you may be wondering, why should this matter to an NRI or an Indian professional in the US? It does because when US government bond yields rise, the ripple effects are felt across almost every single financial market. Let's start with investment here. For last 2 years, many investors believed that the US Federal Reserve would begin cutting interest rates, making borrowing cheaper and pushing stock market even higher. But with inflation remaining stubborn and government borrowing continuing to increase, that expectation has become far less certain. Higher treasury yields make government bonds more attractive, encouraging the investors to shift money away from riskier assets like tech stocks maybe or emerging market. And yes, there is another impact that many NRIs closely watch: the dollar. Now, if we see historically, when US bond yields move higher, the US dollar tends to strengthen as global investors move money into dollar-dominated assets. A stronger dollar, it may increase the value of remittance sent to India in the short term, but it can also create volatility for investment held across different countries and currency. Here, financial experts say that this is a reminder that macroeconomics developments don't stay confined to government balance sheet. They influence borrowing cost, investment return, mortgage rates, exchange rates, and even long-term financial planning for families living across the border. Well, the message is quite simple here. Well, when the world's largest economy changes direction, global money, it moves with it. Well, for the NRIs managing investment in both the US and India, staying informed about these shifts, it isn't just useful, it is becoming essential. But yes, while financial markets are adjusting to higher borrowing costs, another opportunity is quietly emerging in the real estate market. And according to many investors, today's crisis, it could become tomorrow's biggest wealth building opportunity.